I just wanted to chat some stock market related stuff. But I do just want to say I'm thankful that there's still some people out there that really enjoy this content. I've been slacking really hard, but I'm always thankful when I see some nice heartwarming comments saying that you want to see some more, so thank you for that. Although I haven't really been doing as much fundamental analysis I haven't been doing as much technical analysis as fundamental, but showing that Google Sheets screen, it's very blinding, it's so bright, there's no dark mode, so hopefully Google Sheets gets a dark mode soon. But yeah, this is the SPY. We're actually at a really interesting zone on the SPY. So this grind line down has been pushing us since the high of basically December 2021, 2 years ago. Wait, has that actually been 2 years? No, a year. Yeah, like a year. A year of just downward movement. And we're finally broke out of that last week, and then, okay, so I guess this is 2 weeks ago now. This is Sunday, so this might go out, video might go out tomorrow, but I'm recording this on January 22nd, a Sunday. We actually have the first candle wick showing that this is now we're on the opposite side. Like, this could be close. This is a rejection. This is a clear rejection. This is really heavy, though. I'm kind of surprised we bought our way back up, and now we poked above. Interesting. I wonder how important this is, though. Like, that looks a lot more important than like this. But yeah, and even like this, wow, that's a bad candle that week. But yeah, next week, what is it actually? Next Wednesday, I think the Fed is gonna give us another update on if they're gonna raise rates a little bit more. Either February or March. I think they're gonna raise it like another 25%, or is it basis points? Yeah, whatever. That 0.25%. They most likely will at some point, because that was kind of what they said they were gonna do, and that kind of definitely hurt the market a little bit more. But at least bonds will be good. I've been actually buying bonds recently because the yield is so high. Like, why would you buy a stock when you could just buy the bond at like 4.5, like almost 4.25 or 3/4%? It's like it's so secure for the most part, very, very, very secure, and it's yielding a pretty good amount. But yeah, anyway, getting back to this, we'll have to see this week if we get another leg up. If we are, that's gonna be, I guess, good for the market. We definitely have this line that I'm deeming significant. Also, we were at 200, so we actually, interesting, last week we couldn't hold above or break the 400, not 200. So technically we broke out the grind line, but now we're having that $400 resistance. So we're at a technically a very fascinating point in the market. Or maybe not fascinating, but critical point that we'll have to be pretty cautious about. Just gonna look at the Dow and stuff real quick. Dow, interesting, kind of fell down, right back up. Now we're back at this grind line, connecting COVID to the 2008, or just 2018, kind of pulled down. Interesting. We are facing not 350, but close to 350 resistance. But more importantly, that big trend line. And QQQ is still not breaking above that grind line. Kind of interesting, just kind of important to know where we are relatively. It's weird. Gold is almost at 2K again. Look at this. It was off my radar for a while, and it just rips up like 15% in 2-3 months without any pullback. Really, I mean, like a minor pullback, like 2%. Just rips up. I ended up getting rid of some of my gold miners, like WPM. I got rid of, which, I mean, I made some money, but definitely could be making more money. I sell stuff at the worst possible time. NEM, I also had NEM. I had a good little trade. I think I bought it this $45. I think I sold it for I don't think it was 50, but it was a little lower. But actually, is that even a good percent? No, it had to be lower. It had to be. It was at least a 6-7% gain. which is like not really a lot, but I think I held it for at least one dividend too. Logitech ripped up like this. I haven't made a video in so long, but Logitech ripped up. I had my average price like $50. It pulled back. I thought it was gonna go to 40. If it went to 40, I would have bought a lot more. But it basically didn't, or not basically didn't. It didn't. So, but yeah, then it rips up from $50. So yeah, we had like a 30% gain at one point, and then all of a sudden they project that their next earnings can be pretty bad. So we're gonna get that tomorrow, aftermarket. So gonna have to maybe listen to. I like this company. I think management might be a little weird. I gotta look a little bit more into detail about that. But this company itself, I think the fundamentals look strong, and the sector going forward, I think they're well positioned. It's just, you know, I haven't worked out all the kinks and stuff, and then the only, getting back to gold real quick, the only gold miner I have now is Pan American Silver. I'm kind of just moving away from gold and silver. This is the only asset I own with gold and silver exposure. It's hard to explain, but I just, not that I don't care, I don't know if that's a good word. I think I just don't like it anymore. I don't know how to explain it. It's just annoying to hold. Like, it's so, how to even explain this? It's just, it feels so, like it doesn't matter how good the asset is, and the commodity is like, not gonna say corrupt, but it's, what's that word? Why can't I think of this? Suppressed, managed in a bad way, or manipulated. I mean, I'm not gonna blame everything on manipulation, but I'm also gonna acknowledge that the trading is very sus. So I don't know, but I think gold's in not a bad spot, in silver too, especially Pan American. I think it's just at such a low zone. But I wouldn't mind holding this, and possibly I'm at $25. I gotta break even, so we still gotta move a lot. Like, that was a pretty big drop too, almost down like 50%. But I don't want to sell it necessarily because I want some exposure, but also I don't care about adding, and I already got rid of the positions that had money or had a gain in. So yeah, there's that. Yeah, Google's doing pretty good. It's always a weird thing. They say that they're cutting like 6% of the workforce, and stock jumps up because the numbers look good. But like, is it really that good? I don't know. But I like Google below $100. It's at 100 now. I was kind of hoping it would go like 75, 80. I mean, the big thing for me with Google, though, I mean, it might be dumb, but I want to invest in companies that pay dividends. It's just something I want in a stock investment. So the fact that Google doesn't is a problem for me, and they're not looking to ever pay one really. Which, I mean, it's okay, but I'm just saying that that's why I'm only dedicating like a smaller percentage to this. We still own Intel, but picking up shares the entire way down like an idiot. Average price is still $42, just below $42. So we averaged it down a lot. Oh well, actually all the way down here, because at one point it was like 50 something. I need to still do my due diligence on this company a lot more. I kind of been slacking, but I mean, I don't think anyone cares, but I started up my non-ASMR finance channel, and I need to, Intel will be a topic on this channel, but yeah, so that's again why I gotta get back in the swing of videos, 2023, new year, new me, but more importantly, I gotta keep up to date with the companies that I own, especially Intel, because there's potential for a lot more, I don't want to say more downside, but it's risky. There's risks involved, and I don't know, it's a turnaround play. I don't want to get overexposed and blinded by the fact that this could be great, and I'm just in a zone where it pulled back a lot, and it's tough. It's a tough investment to have down a lot. I like to think, I mean, obviously that's why I'm buying it, but I like to think it's gonna be a great one, or a great investment, but you gotta be willing to sit through some pain. I wouldn't even call it pain, it's just uncertainty for me, because I have a good amount of money in Intel. It's actually, what percentage change is I'm redoing my entire portfolio. I'm selling a lot of junk, or I want to. Actually, yeah, sorry, I keep getting sidetracked, but I'm narrowing down my portfolio to smaller or less assets and more specific assets to a certain investing principle or whatever. I had a dumb trade this last like month or so. I think I bought. I don't want to open up the trade, but after earnings, Hainesbury. No, before that. Wait, did I have it for that long? No way, I did not have it that long. Haynes went to like. Was it that long ago? I think after earnings it rips up. No, yeah, it had to be after earnings. Like I bought something. Actually, let's just put on the trade real quick. Okay, so I bought Haynes at like September. I had to tell you guys that I had to make a video before that, but it ripped up, goes down, it's earnings off. I start picking up here, more here, it goes up, down. I buy here. I think I bought a little more here. Then I sold it at like $8. $8 was. I'm like, okay, I'm out, whatever. That was like, I think it was a 15% gain because the average price was about $7. There was no reason to do this trade, and I got that little dividend too. 15 cents. It was like 8% yield or something. But I mean, obviously 8 divided up, so 2%. Actually, that wasn't a bad trade. But yeah, I shouldn't be trading. I don't know. I did this because this company just looks so suppressed. Like, but they have so much debt. It's just not worth the risk, in my opinion. Sure, it could be a good turnaround play, whatever. But that's not. I want to be more disciplined with the stocks I invest in, my investing strategy. Like moving forward. I think this last like since I started actually investing with my own money in the market, I've learned a lot, but I think I'm done being dumb or taking on unnecessary. I got to use my words. I think I have found, to me, what makes sense as an investable stock with the highest return, with the lowest amount of risk. And to me, that is the sweet spot that I want to hone in and put the money towards. Will I make the most return? No. Will I? But also I'm probably not gonna lose the most amount of money ever because of the assets that I'm choosing. So yeah, I think that's a great way of putting it in my head. Is that I think I found for me what I want in the portfolio that is gonna generate me the highest return with the lowest downside without being too conservative, but also not being too reckless. Like, I want to not be, what's the word I just used? I want to be not conservative, but not too reckless. But also I want to capitalize on the big moves and stuff, right? So, I think I figured it out, but anyway, let's get into Foot Locker. Let's just talk about some other assets I have. I still gotta do my more due diligence on Foot Locker. Right now we're up. This was a crazy trade. Like we've had this for so long now. We've had multiple dividends too. Actually, I had it before this. I had it like 40 whatever drops. I think I picked it more here. I didn't pick it up at I had to pick it up at 25. Not as much as I should have though. I thought it was gonna go back to 25, but it found support at 30. I'm looking at the other screen. My yield is like 4.67%, which I mean it got a lot higher down here. But look, so I'm about to point at the screen, but they should be increasing their dividend. Actually, this is very exciting. I wonder what they're gonna do. Are they gonna jump up to 50 like maniacs? Are they gonna go? I think 45 would be okay. I have to do my due diligence a little bit more. But I think they don't have that much debt. They generate some pretty good free cash flow. A lot of it is from DNA though, so not the best form of free cash flow in my opinion, but I'll figure it out. I was gonna say, what was I? Check out this, look, huge spike in volume, all these times. It's crazy interesting. Massive spike in volume here. Even on this bad day where it dropped, or week, it dropped 15%. Not a lot of volume. That should have been when that week closed and compared it relative to the candles around it with the volume. That should have been a pretty good sign, actually. This is obviously hindsight. Even like this. Down day, average volume. but then you had this huge up. I don't know. Yeah, it's interesting. Obviously, it's hindsight, but volume does play, or it does have a relationship with the price action. But yeah, Foot Locker been holding it for a while, and honestly, I'm getting some pretty hefty dividend on this too. But right now we got a 10% gain. Yeah, 10% gain right now, 9.9 technically, but 10% gain with again a bunch of dividends. Actually, I think we have a whole cycle, so that's like about 4%, maybe like 3.5. Not more than that. Yeah, like let's say 4% yield on it because we held it for basically a whole year too. I don't think it really added either since at least down here. Google Intel at 3M. 3M I might be selling soon. I don't know. I gotta do my due diligence a little more again. I think now is not the time to sell 3M, but not the time to buy either. But I just don't really want to own the stock. Same thing with Verizon. I'm not saying it just because it dropped so much. I'm mostly saying it because these no longer fit the portfolio that I want to hold. And I want to hold stocks that don't have a lot of debt, generate a lot of free cash flow, and pay a dividend. Verizon and 3M, they generate some good free cash flow. Not the best. They pay a dividend, but they're so heavily in debt. It concerns me, especially if we are going to see these increasing rates, the new environment we're going to be in with increasing rates. I mean, obviously, that might stick around. We'll see, obviously, but what's the thing I was saying? And it depends on when they have to, or like Verizon and 3M have to, they can buy more debt and refinance that debt. But I just don't want them in the portfolio. Just so I'm not saying stuff that's dumb, but I don't think Verizon and 3M are a sell here. I think they're just super cheap. So I'm gonna try to hang on for a little bit. Maybe they go up, maybe they go down. And if anything, 3M's kind of a big position, and Verizon too, actually. It's my 4th and 5th biggest position. They're both the same, actually. But they both have a 20% loss in the portfolio. What was I gonna say? They're not the biggest positions, but they're also not small. And I can, what's the word? Get them to be smaller positions by just buying other things and, adding money to the portfolio. But the best thing would be these go up and they get a little bit. I want to break. I don't have to break even, but I'll wait for a time when I think this is more appropriate to sell. It might be getting there soon, but it's definitely not there yet. So that Walgreens, kind of in the same boat with Verizon and 3M with the debt, but the multiple on on this and Verizon is so cheap, but also it's got problems. And the growth rate's gonna be slow, and it's gonna, it's a tough decision. Walgreens is the 3rd biggest. Wow, is it actually? So this is the problem I have. The number in my portfolio, I got 1, 2, 3, 4. Actually, how many is this? 12 stocks. 12 stocks, and the 3, 4, and 5th biggest positions are Walgreens, 3M, Verizon, all with a lot of debt. I don't want debt in the portfolio. I think I could probably pick one of them, but combined they're big. Like, it's a pretty big position. Again, debt isn't a bad thing, but I'm trying to figure out ways to reduce my risk. Exxon, though, keeps trucking up. We're up 186%, not including dividends. Did we even talk about this? They raised a dividend 91 cents. Yeah, I don't know how high is this gonna go. This is like almost the highest the stock's ever been. This means the highest has been consistently. I mean, you look at this chart and you go, it's got to pull back. But then you look at the macro environment and you're like, no way. I don't see this pulling back anytime soon. At least to like $60, I don't know. But I like Exxon. I like Darren Woods, the CEO. I think he's knowledgeable and actually he's been running the company. I think it was like 35 something years or something like that. He knows what he's doing. But more importantly, he knows the sector and the environment that he operates in. So, yeah. So, I mean, I have some other stuff too. Snap-on, I gotta increase that. I like that. We got like Ruger, Smith & Wesson, been adding to it a little bit. Getting smoked and Smith & Wesson down 40%, but I was down like 55% at one point. It's like, oh my gosh. Ruger had a 5% or $5 dividend. So I started buying Ruger after earnings, like here, at like $50. They had the 5% dividend. I was like, what? So that to me, my average price is 56 now, so I'm all the way up here. Wait, how is that even possible? I bought here. Oh, I think I bought like 52. I don't, anyway, but. So on my investment, I think I have like actually I have it right down, 50. I want to do this math. I'm actually curious. So on my investment already, just including this dividend, I'm up 8.9%. Right now the position is down 3.3, but this is a longer term position from what I want this on the portfolio. I saw this as an entryway to get a nice percent increase in the portfolio or in this position with absolutely like zero risk, because I want to own this position anyway. So yeah, not including other dividends and stuff. But what did I just do? Kind of hoping it gets back to like here again. This is risky because of the environment that the world has been, or at least the United States is operating in, but it's also, I don't know, we'll see. I guess I won't talk too much about that, but the stock, the fund, the balance sheet's crazy. They're making money. It's wild out there. I got all out of uranium. Not that happy about it because I think uranium like has to be the energy of the future, but like 90, like 85% chance. I got a good gain in uranium multiple times. It even moved up pretty good. If you went to like $5, I would probably buy it again. But out of the market lost the hype, and it was still like a couple years away from anything soon. Like minor CCJ's got until I think 2024 till that thing turns back online. Oh, I moved it up a lot. Wow. Okay. I might be being dumb here because I was at $17 when in my position, maybe 18. I don't know. Again, I want to narrow the focus, be more disciplined with what I want to buy. And I guess so. Let's wrap this up into my more macro view. I think we're going to see a time again when the market's going to drop XX%, double-digit percentage points. And I don't know when that's obviously going to be, and it doesn't really matter. In the meantime, I want to pick up companies that are fundamentally very sound and fit my portfolio with the things I identified before. When the market does do its thing, again, it always does every couple years, and falls to cheap valuations, I want to have the cash ready to pick up and scoop up the shares. Yeah, I like these talks because it kind of lets me understand what I'm trying to do. The market, over time, let's go to form. It goes up. I mean, okay, let's not look at this because in general, the market falls, goes up. Actually, let's go to SPX. Falls, goes up in general. We got inflation, we got other things, but yeah, in general, it goes up. I still think we have a long, long way down. Actually, let's do a standard deviation. Now's a great time to put this on. Curious too. So I want to throw the 2 standard deviation on it. So we're still above 2 standard deviations, but not above 3 from where the mean should be. I think the market sees somewhere down here again, in the next couple years. And again, people can say, if you keep investing, the market goes up and you make money, and you don't want to miss out. Not even FOMO, but time in the market beats blah 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 blah. Yeah, I get that. I think buying every month is important. Not a lot though. I think waiting for moments like COVID, like this, like whatever, at certain points in the grand scheme of things, and you pick up a lot of shares of a company that you've been eyeing up for a while, and it's cheap, and then eventually in a year or two that rips, or maybe even 3-4 years, that goes back to a higher valuation. Those are the moments that I think are the most significant from an investing point of view. And again, I'm not gonna. People say you can't time the market, but you could use some common sense and say, I'm not gonna put all my money into this right now. I think the market maybe sometime in the next couple months, next couple years, falls to 30% to let's say 2,500. When it gets there, I want to have a butt ton of cash in the portfolio and dump it into things. And that's that. Again, though, to counteract that, I might be wrong with that. You just buy a little here and there every month, but don't overdo it. Anyway, that's what my position is, my thoughts. Again, not recommending any of this. It's just from what I've come to think is the best thing to do for myself. Thanks for watching, everybody. Hope you enjoyed. Let me know how your portfolio is doing, and stay relaxed. And hopefully, you guys